Pending home sales rose for the third consecutive month, up 0.8% from January. For a deeper dive into the real estate sector, we welcome in Odeta Kushi, first American Deputy Chief Economist. Great to have you on the show, Odeta. So first, I want to get your reaction to this data and really the state of the housing market at the moment.
Absolutely. It's great to be here. I mean, the numbers beat consensus expectations. The expectation was that pending home sales would fall this month. And that's really because we had a month where rates went from 6% to 7% by the end of February. So the 0.8% is a modest gain, but it's the third month of increases, and it comes alongside increases in things like builder sentiment, mortgage applications. So it's a very soft start to the spring home buying season, which is a very crucial time for the housing industry. So we're off to sort of a soft start, but a lot of demand out there. The issue is really the volatility for mortgage rates and the lack of supply.
So you say this is a slow start, then what is the outlook from here?
It really is dependent on mortgage rates. This is a very interest rate sensitive sector. Right now, mortgage rates are down a little bit, and so that should help to coax some buyers off the sidelines, really help with affordability. But then, of course, you can't buy what's not for sale. And so inventory is just so low that, we might actually see a bit of an increase in prices because those who are shopping around might be stuck in a bidding war.
And as they like to say, real estate is local. So talk some of the markets here that are seeing some of the sharpest changes.
So the West Coast, in particular, sort of the more traditionally expensive markets, San Jose, LA, San Francisco, we're starting to see double-digit price declines in those markets from the peak. Whereas markets in, the Midwest or even, the Florida, South Florida, Miami, prices are fairly resilient. They're still very high. The pending home sales from today showed that, there was regional increases in pending home sales in all regions except the West. So again, this traditionally more expensive markets are really the ones that are bearing the brunt of this affordability crunch and sort of the decline in the housing market.
So put this in context for us in terms of how it fares versus 2008, because a lot of people say, housing bubble, but are you seeing that as well?
No, this time it's different, or maybe I should say last time it's different. This is a fundamentally different housing market. We don't have, these loose lending standards, subprime mortgages. The fundamentals were really the driver of the house price acceleration over the pandemic. It was an increase in demand and against very, very limited supply. That was the result of that was house price appreciation. That was not the case last time around. It was driven by speculative, lending practices and fix and flip buyers. And we're not seeing that, consumers that were buying homes are in a much better position.
And what do you think are some of the risks that perhaps some people aren't really pricing in at the moment when it comes to the housing market?
Well, the risk right now is if we have a job loss recession. Right now, we're seeing price declines, pretty broad-based price declines. Obviously, some places are more resilient than others. But if you have those price declines alongside job losses, that's really when we're at risk for distress or foreclosures. You really need both. People have an inability to pay their mortgage and also underwater on their properties to have the outcome of foreclosure. And right now, the job market is very strong, so we're not worried about it at the moment. But if that starts to happen, that's really where I would be concerned.
And obviously this is happening amid a banking crisis that seems to at least be stifled for the moment. But we're looking at what might happen in the future in terms of tighter lending conditions. We know that people have been watching the commercial real estate market. And what about the residential market as well?
It's a little too soon to tell. I do think we'll probably have some tightening in residential real estate, not to the extent that we'll see on the commercial real estate side. It's interesting because there's sort of this housing benefit from the banking bust because mortgage rates sort of came down. There was all of this uncertainty, investors sort of flocked to the safety of U.S. Treasury bonds and mortgage rates declined. And so you get this affordability benefit from lower mortgage rates, but then of course the potential for credit tightening could negatively impact the spring home buying season.
And obviously this is a snapshot. What else should we be looking at in terms of direction for where the housing market goes from here?
So, obviously mortgage rates are the big thing, but recession risk, uncertainty is really the other side. And I think coming back to demographics, there's all this demand out there. The problem in the housing market's not demand. There are plenty of buyers on the sideline. There's a massive generation of millennials that are aging into their prime home buying years, and they're sort of waiting for the market to be more affordable so that they can jump in. So I think from a long-term fundamental perspective, you have this demographic tailwind, and really the question mark is what will happen with mortgage rates going forward.
And even as we look at things like affordability and also availability, when we look at what's happening with construction trends as well, how much more difficult is that going to make the picture?
That is the question. Inventory. The inventory is so low from a historic standpoint right now. Existing homeowners are staying put. 93% of existing homeowners are locked into mortgage rates below 6%. And so in this environment of higher mortgage rates, they don't have an incentive to leave that low mortgage rate. And so they're not selling their homes. There's sort of this seller's strike in the housing market. And the majority of home inventory is existing home inventory. So if they're not selling, there's nothing out there. Builders are sort of picking up the slack. So they're sort of gaining market share when it comes to inventory. So if you can't find an existing home for sale, it's possible that you might find a new home for sale because that inventory has been increasing.
And in terms of how builders are changing, because some of that I've been speaking to who used to do some of these big luxury homes are now looking at sort of more affordable townhouses, trying to really adapt to these market conditions. What are you seeing at the luxury end versus sort of the lower end of the housing market?
It's still really hard to build for that first-time home buyer. You know, the number of projects that are priced below $300,000, which would be where that first-time home buyer is very, very limited. It's just not profitable for builders to build at that price point, but certainly that's a price point they need to be thinking about because there's this huge demographic of potential first-time home buyers that are looking in those price ranges.
And as you mentioned, they're waiting on the sidelines.
They're waiting, exactly.
We'll have to see what they do. Great having you on. Odeta Kushi, their first American Deputy Chief Economist. Thank you for your time this morning.